Good morning, everybody. Welcome to episode 3 of Coffee and Charts. It is 4/16/2022, and we're going to be looking at the week of 4/18. So let's see what's going on. We're going to start with our typical fashion, and we're going to go through the watch list that I have of about 10 tickers that I particularly trade, and then we'll look at some additional information, see what the week might hold for us. So to start with, we have Apple. On the weekly, have all of our previous lines drawn, so we can take some of those things out, the highs and lows that we've taken out during the week. So move and remove. Now on a weekly level, what we have here is range, going through the range of the broadening formation that we've drawn previously. So I'm gonna leave the broadening formation as is, not really worry about changing that. So to me, if I'm sitting here looking at Apple, I'm looking at it's still moving to the downside, maybe continuing range expansion. We have that all the way down here to 140, the 140-ish dollar range. So that's one possibility. Another one obviously is to things go up. So one of the reasons that we draw broadening formations is to give us an idea of the way that the range is going to expand, the way the price is going to go or fluctuate. So remember, price oscillates. It doesn't always just go straight up or straight down. So we can have some range expansion at the top and come back down. So this is what the weekly looks like. I do all my charting on the daily because I do intraday trades. So the way that works, if you're not familiar with the process, is I have levels that I put in every single morning after or night after the market closes. Just depends where I find my time. And I label these because what ends up happening is when I put them in my flexible grid, I'll be able to see these levels a lot better and make a informed decision on how I want to take my trade. So go ahead and put my 3-2 up and a 3-2 down level there, and then I'll mark my potential resistance levels. So there's some strong resistance here just because there's two levels pretty close together. Then we go all the way up here. There's a micro gap fill. I do like to mark those just to be aware that there is in fact something that could move the price very quickly in a particular direction and then come back. So go ahead and mark that, and then have price breaking all the way to the 180 area here. All right, so that's the upside. Downside, we have all this, 163.01, 159.76, 157.63, 150, so on. So if I zoom out right quick, this is what Apple looks like right now. The green boxes, again, if you're not familiar with what I've been experimenting with here, the green boxes are what I'm calling areas of liquidity. Basically, either the price comes down that area and then we have a bounce up, or there seems to be some consolidation and support and then it bounces up, or there seems to be some resistance in that area and it drops down pretty abruptly. It's not a quick move up or I'm sorry, it's not a slow move up or slow move down. It's quick. So this is where I'm experimenting on determining where big money's buying in or selling, going short, things like that. So generally try to avoid trading things right now if it's around these boxes, just because like we look at Apple here, 5-minute. So we can look at the first look at that box here. So it seems like that this area, this has price does have memory. So this area just it abruptly goes through, comes back down. So to me, we're oscillating around this area, very unsure of what we want to do until we again get above it or get below it. Then we come back through, and now we've dropped below. So if I were to zoom out, I switch to a little bit higher of a time frame. So now I'd be looking around, again, our low, there's an area of consolidation here, but not necessarily like an abrupt move up or move down yet. So we have the 157 area that has my next liquidity box, 157, 58, and so that's a area of potential contention that I'd rather avoid trading just because potential chop. So all right, so that's Apple. We're going to be looking at 3-2 to start with, and if we go a double 3, another 3 on Monday, well, that's a completely other story. And if you wanted to drill a broadening formation, again, mine's pretty large. I prefer larger broadening formations just because I can kind of see things moving that direction. But if you wanted to make a new broadening formation, you definitely could. I do also avoid making a broadening formation with the current candle that's on here. I always avoid that. I'll go back to the next lowest low, which would be this 2 that happened on 411, and you can make your broadening formation that way to the next lowest. Okay, so that's Apple. AMD, looking at it right quick on the weekly, and then moving to the daily. I'm going to go through these a lot quicker than normal just so that I can talk about some other things that people have been asking me in the Discord. But what we have here is another pretty much a 2-down continuation on the weekly. So the next area of support is going to be the 89.65 area. So AMD does have a pretty wide move during the day. If we look at the ATR, it's a little over 5. So we do have some potential move to be able to see that 89 area breached in an actual day. And then if we look at the daily, it has taken out my broadening formation. So we already have some range expansion happening now. So what we could do is redraw the broadening formation. I'm gonna wait and see what what Monday holds. Leave my current broadening formation as is. So now what did we do? Well, we moved the 3 or the low here and then the high here, and I'll just go relabel these right quick. So my assumption is that things are either going to go 2 up or 2 down. And if they go 3, well, that's, a possibility as well. But as of right now, I would prefer to just, do a 2 up or 2 down and not have to worry about labeling things, maybe a potential 3. So as long as I know where my high and low is and what the current setup is, I'm a pretty happy camper. Again, if I zoom out, we do have the support areas. I mean, we're reaching back in support now. All the way to July. Using support from July now to support current day prices. So that's something to keep in mind there. Now, looks like I'm going to have to draw some more liquidity boxes. So let's see if we can find some sort of abrupt move that kind of move things up very quickly or down. So it does look like we have an area right around here. So let's expand that out so that we can see what it looks like. So that's right below our current price. So right above the 89.65 area, but right below where the 2 down trigger would be for the daily. So that's something that I'd like to again be aware of, just in case we do see, well, okay, this is too much of a drop. The buyer or the big money has decided that the price is too good to pass up and want to go ahead and drive us back up, north. That's always a possibility. So we'll see what happens. All right, so that's AMD. Moving on to CCL, let me go down to auto. All right, so CCL, we have a failed 2 up on the daily. Now, what does the weekly look like? Right quick. Weekly, we're sitting in the chop zone. I mean, a 2 up, a 3, a 2 down, but it's green. Right now, until CCL kind of figures out a direction, this is usually something I'll avoid. I did actually take a CCL trade last week, and it stopped me out pretty quickly just because, again, I think the chop. So I also had a pretty tight stop loss on that one. So that's something to keep in mind. When you're sitting here looking at things from in a larger perspective, you know, the weekly, the daily, you can kind of see that there's either going to be chop or there's not. You know, we in the daily we do have moves up, but I mean, what we are looking at here is a pretty solid, you know, move down. Now we're kind of moving up. Well, this could potentially, I suppose, be a new broadening formation inside the broadening formation. So if we just were to connect some things here, this is a potential area of range expansion that we come through. Now, if we go through that, well, that's you know, something to be concerned about. We also have that broadening formation all the way down here. So the base of the broadening formation all the way down to 1437 area, $14 area. So keep those things in mind, and always good to draw your broadening formations. Again, whether something passes through them or not, I mean, it happens. You know, price is always expanding, but the one thing that I like to do is just have them in place. Again, gives me an idea of a potential price target as well. I want to actually go back to AMD right quick and show you why. So I'm sitting here looking at AMD, and on my flexible grid on AMD on Friday, we have Thursday. I'm sorry, Thursday was last trading day week. So I have this broadening formation. The base of that broadening formation. I also have at the time this was our down. Or this was our price target here. So it was 94.72. So I was looking at that saying, okay, well, I have the bottom of my broadening formation happening coming up. Now, my price target when I bought puts, it was $95 puts. I also had like $96 puts, but 95 was the max that I was willing to go at the time because I didn't know whether price was going to decide to bounce or if it was going to fall through. Now, based on market conditions on Friday, things looked like they were going to fall through. So I was pretty confident in my trade. But you'll notice we get to that broadening formation and price starts to teeter a little bit. It doesn't necessarily just drop through it. So all, again, things to consider. And that's why, you know, having broadening formations, having levels, all that stuff is good. I mean, again, like if I drew my level right here right quick, you can see why it decided to also teeter. So the broadening formation and the low of the previous day definitely gave this something to consider, potentially stopping people out, stuff like that before the move down. So have some confidence in what you're doing, and the only way you can have confidence is by, you know, charting out your levels, drawing your broadening formations, knowing what the environment holds for the day, things like that. So all right, so back to CCL right quick. I got to move my lines around. So we're going to be looking at a 2-2 reversal for CCL. Now, I do like 2-2 reversals, especially on the daily. I know I said the weekly was pretty much chop. So let's kind of see what's in store for it, though. So I'll be looking at a 2-2 reversal. If it does trigger 2-2 down, 2-2 reversal downside, we have a move to 1878. That's pretty good magnitude for CCL. So that's a potential move there. All right, next is DraftKings. Been playing DraftKings less and less, mainly because the spreads themselves, or the volume and open interest isn't all that high on a lot of them. You can go to, you know, like the super round was like 18, 20, stuff like that. The volume in OI seems to be a little bit better, but that's just a little too far out of money for me, considering that we're only moving about $1.50 a day. So we've been sitting in some, you know, consolidation right now, a little unsure of which way to go. As we can see, price has just been going sideways throughout each day. So we do have a 2-1 setup. So we have a 2-1 up and a 2-1 down. So we'd either be looking to take out the target on the upside of 1721 if we breach 1687, or not a lot of magnitude on the downside. So I'd definitely be waiting until it reaches the downside at 1621. So not too far off of the actual entry of 1630, but I like to wait just to make sure that we just don't have some, a tiny bit of fake out before we move on the upside. So I'll be waiting until it breaches the bottom of that 2 candle there, that 2 down green candle, to move down to 1591 for a bigger move down to 1497. On the weekly, DraftKings has a, zoom in here, a shooter, 2 down, 2 down green shooter. Grab some coffee right quick here. So, not the typical shooter that you'd like to see, right? A green 2 down shooter, but ideally, I'd want to see it red, a 2 down red candle, but that means some buyers did step in. Can we determine when? So the buyers were all from 411. So after we have the 3 candle here on 411, we just kind of have some sideways movement. We had some up. Now there's that liquidity area again that I was talking about earlier. It looks like it's also acting as an area of resistance. So that's probably the area. I think this is the area I drew it on. I wish I could label these to say like what day or time frame what day I used. And in this case, just based on the wick, I believe it was on 124. But we have an area that looks like it acted as a little bit of resistance. So that's, again, something to correlate when I'm sitting here determining how I want to make a trade. Okay, so a lot of sideways movement. Again, look for a big move up or down before you jump into DraftKings. Just to get out of that, sideways consolidation. All right, Ford. I only added this to my list last week, so I haven't really been tracking it a lot. I mean, I used to play Ford quite a bit, but I haven't played it lately. So Ford, now this is what I like to see. A 2 down green, a 2 up red shooter. So to me, this is prime for a 2-2 reversal with a initial price target of 1522. So I know that doesn't seem like a lot, but in terms of playing like the Dow stocks, the Fords, the CCLs, the airlines, things like that, those kind of moves actually are pretty nice. And the nice thing is the options are pretty darn cheap. So 2-2 reversal, Ford definitely is going to be something on my list to look at on Monday, to track on Monday. Be looking for an entry after $15.46 on the downside. Weekly, the 2-1 on the week. So if you want to swing something, put your levels. I don't do weekly levels right now, just because I have so much consolidation sitting around here. It's a little hard to tell, but you want a high low of the weekly and make your determination depending on which way we break. Are we gonna have a 2-1-2 reversal or a 2-1-2 continuation to the downside? All right, Facebook. Okay, so it looks like another 2-2 continuation to the downside with Facebook. A lot of tech didn't look all that great at the end of the week. Not much actually looked good at the end of the week. We have 2 down, and then here we're going to be doing a potential 2-2 reversal. Area of consolidation. We also have, honestly, a liquidity pool there. So we'll go ahead and. Good morning, everybody that's joining the Discord now. So I definitely want to see a break through this. The only reason I put that in, we seem to have a lot of buying. It looks like there was a pullback. I mean, this looks like an intentional pullback solely to be able to jump in and buy more before a bigger move. So that's interesting to me. So I'm gonna just that's why I put it on the chart. Something to just keep in mind there. So here's what we got with Facebook right now. Now I have a pretty large, again, broadening formation drawn for it, all the way sitting down here. I doubt it's gonna go range, through the range all the way. And again, maybe that's just the optimist in me. I don't want to make a bet, right? I mean, but that's just an observation of mine. So I'm going to leave it as is, and we'll see what happens. I am going to trust my levels at this point. So if we do break to the downside, my next level would be the 207, 63, and 206 area that I'd be looking at to hit. And then if we continue to move down, clearly, we're kind of getting wider and wider to drops, and we even have a little bit of a gap fill. Oh man, wrong line. We have a little bit of a gap fill all the way down here, so go ahead and edit that gap fill. All right, and then on the weekly, yep, 3-2. So we could be looking at a 3-2-2 continuation or a 3-2-2 reversal to the upside. Now the magnitude would be nice. The entry would be 22203, and our target would be, roughly 237 if we did a 3-2 reversal weekly. Again, that's if you're looking at things to swing. All right, moving on. Microsoft. So tech again, pretty much gonna look the same as like Apple and QQQ and SPY. So, all right, so we had a 212, almost had an outside day. I mean, we missed it by 58. We missed it by like 20-ish cents, 27 cents or so. Close. But anyway, so we have 2 down. So now what we're looking at is potentially, let's see, a 2. So this would be a 2-2 continuation. So just another 2 down if we continue to move that way. Or we could be looking at a 1-2. Rev strat. Or just a 2-2 reversal. That's a pretty authoritative 2 down though, so wouldn't necessarily be looking at the at a possible rev strat. Oof, yeah, that's a heck of a drop. And then base of the broadening formation, again, just connecting a lower low to a lower low, and then a higher high to a higher high. So what we do have here is clear change in direction. So what we could do is actually move our broadening formation like so if we wanted to. I mean, it's almost flat. That's gonna pick a pivot and go with it. But what I'm gonna do is actually put it back to where it was. But essentially take your current highest high and connect it to your next highest high. I choose pivot points. So in that case, what you'll have is something more like this. That'll be a pivot point there. So that's, what, we'll leave it at that. That looks nice. Again, I always like the greater than or less than type of symbol when I'm sitting here making or greater than, I guess, less than when I'm sitting here making my broadening formations. Versus something that's versus something that looks like that. Like, to me, that doesn't help me much. That's like a trend line up. Broadening formation, on the other hand, definitely something that you can use. All right, so back in. So I'm gonna go ahead and take out this line, this level right below our entry just because it's so close. And we go to the downside 275, and then we go down to the 272, 270 area. Now I do have a liquidity area set up here, probably from this 3-bar tiny little wick along with this wick, which is a bounce. So see what Microsoft does. Right now futures are pretty flat looking. Yeah, so 1-2-2 rev strap potential, or 2-2 reversal, and a 2-down continuation as a possibility. Micron. Trading this less and less, really been opting towards AMD, so be quick. If I don't trade Micron for another week or two, I'm probably actually going to remove it from the list altogether and find something with high liquidity to replace it. So if you have suggestions, feel free to throw them out to me. All right, so Micron is looking at a 2-2 reversal and a potential 2-down. So it also kind of looks like we're sitting here looking at this kind of range. I mean, we've been kind of within it. So I wouldn't call it consolidation per se, but it definitely is showing signs of a smaller broadening formation. Like that there. So it's okay to have broadening formations within broadening formations too, y'all. So I literally draw all of mine on the dailies. Got in a conversation about drawing them on smaller time frames, like the 15-minute or 30-minute if you're trading the 15-minute or 30-minute. But I personally just like to draw them on the dailies. The levels seem to hold pretty well. Bounces occur where the drawing scene where I draw them, so I don't really worry about changing my time frames. But they do occur on all time frames. That's something that you should know. All right, so if MU drops much more, it's going to be pulling from some old support. So we got 68.34, 68, 60. So we're going to be looking at like 67.45. Basically a lot of chop sitting around here. Things that you don't like to play. So old chop area, but really only 3 levels or so. A lot of I'd almost avoid playing MU if it drops into this area, just because the support's all sort of choppy. So I would almost think that it's going to be choppy around here too then. Until it, zoom out. And got some time, but 65.14. Then once you get past that zone, the chop, we'll call it the chop zone. Then you got pretty solid drops. So again, my goal when I trade is to try to find the most probable success, right? That's what I look for. So I have a broadening formation drawn. Again, it's all opinion based, right? But if I have a broadening formation drawn and we're coming close to that broadening formation, I also have a key level at that area. I'm putting a little chop zone or a consolidation or liquidity zone in that area. Things like that help me have confidence in my trade, and that's really what it's about. So find your system and go with it. But this is working for me, and that's what I'm trying to pass on y'all. I actually do my levels. Yes, I did. Okay, so looking at Neo's been a pretty fun trade over the last week or so, couple weeks. So we have a 3-1. Now that is a fun setup because the magnitude is usually pretty nice in one direction or the other, or sometimes both. So we're going to be looking at a 3-1, 2 down, or a 3-1-2 up. With magnitude on the downside of $19. So I'd be looking at like the $19 puts if we go to the downside. The upside, well, we got some resistance right above the entry, like 17 cents above the entry. So my target would be the 2071, but I would definitely be keeping a very tight stop loss until we get over the top of the three, which is 2056. So not a lot of magnitude to the upside until we get past the 2071 mark. Then we get to move to almost a whole dollar in movement. Just always keep in mind what the average range is, average range of ATR. That way you can make your plans accordingly if you're day trading or swing trading. Ideally then, if you're swing trading, you take your ATR, multiply it by 4 or 5, depending on how many days there are in a week, and that would be your move if it were to go all in that direction. Otherwise, your daily range is going to be 1.7. So I wouldn't be looking at $25 calls, for instance. Oh, somebody joined, and now we got an echo. All right, we're going to look at Exxon Mobil right quick. It's the one gas I have on my play or on my list here. So that would be a continuation for the 2 up, and then we have a 2-2 reversal as a possibility. And gas has been interesting. It has its big up days and down, and then up and down. And I've actually been avoiding playing gas just because of the uncertainty. It seems, even though you do see it making higher highs. I don't know, just seemed uncertain to me what's going on here, so I've avoided it. But here you got your 3-2. You have a 3-2-2 potential reversal, or just a 2 up continuation. Now, we go up. We have magnitude all the way to 91.51, but we are about to approach a liquidity zone. We are also at the top of a broadening formation. I draw this on those 2 candles. Yeah, that's I use the 2-3 here, so we could always change that to give it a little bit more definition. Why I didn't use that one. All right, so Exxon Mobil, it's a possibility. I mean, look at what's like Oxy doing. Not typically on my list, just because the spreads get weird. But so Oxy is just kind of consolidating, and is almost a big bear flag. But it is a 2-1, so I don't know. That's definitely a more interesting setup. Okay, well, yeah, I'm gonna avoid Exxon Mobil right now. Just again, coming to the top of the broadening formation, I definitely want to see what it does. This liquidity area. I mean, we're approaching all-time highs again, I think. So something I'll avoid, all-time highs. Okay, so that is my typical watch list. Lastly, I always have SPY and QQQ on there. I keep track of these levels just like everything else on a daily basis. I do that because I like to, especially on like Wednesday, Thursdays, and Fridays, trade tech stocks. So knowing which way SPY and QQQ are going gives me some pretty solid confidence, again, in a play that I'm doing or gonna make. So we have a 3-1-2 that happened on the daily. Now we're looking at maybe a 1-2-2 rev strat or a 2 down continuation. Go to the downside. And the upside is that potential 1-2-2 rev strat. I'm just going to do a 2-2 reversal just based on the fact that this is almost a 3 candle again, just like a couple of the other tech stocks we were looking at, very close to a 3 candle. So we got a lot of movement that needs to happen here to be able to, from closing down here in the 338 area to taking out the previous day's high of 346 is a heck of a move. So if that happens, that's a heck of a rally in one day. So point is, I wouldn't be looking at a 2-2 reversal very soon in the week. Okay, so that's QQQ. Broadening formation still in effect. Doesn't really look like we have a lot of we pretty much closed that gap. I'm going to go ahead and just remove that. Resistance to the upside by almost 70 cents. We got our downside. That and just put a level there. So there we have our current setup for QQQ. What did it look like on the weekly? Can't be pretty. Yeah, 2 down continuation. All right, so we have clear rejection, around the 371 area. And now we're coming through to the downside. I mean, at this point, you're looking at a potential weekly target of 317-ish. That would get depressing, but then we trade what we see. So if we have another 2 down continuation, I mean, we're moving down, 330, 319. So keep that in mind as you're looking at things to go potentially long with. Always keep QQQ and SPY. All right, SPY is going to look very similar to QQQ, just because so much of what's on QQQ is now the top holdings in SPY as well, things like Apple and Microsoft. The difference is that SPY actually did go 3 on the day. So now we're just going to be looking at like a 3-2 down or a 3-2 up. We're going to leave it at that. And to the upside, we have 445.75, so $1 to the upside, and then pretty much $1 to the downside as far as support and initial support and resistance goes, I should say. So let's again see what happens. We're still going through range expansion. Haven't really done much more discovery yet, unlike AMD, where again we're kind of starting to do some new discovery of prices over here. Okay, so that's it for charting. The couple questions that I got from folks in the Discord during the week was the first one we'll talk about is playing failed twos and how do they work. So with AMD, we'll just talk about some failed twos. So the first thing that I like to do, again, is chart my levels so I know whether we're going upside or downside for the day. That's the first bit, right? So if I'm looking at, let's go, actually, I'll just do it on this chart here. So we're going to be looking in the lower right-hand chart now. So this is AMD, and we're going to be looking at AMD on Wednesday. I don't actually have a particular play that I'm sitting in or looking at, or did, I should say. So I'm doing this all from the top of my head. So if we don't actually find a appropriate setup, then it's going to be a little awkward, I guess. Okay, so here we go. Let's look at Tuesday. So Tuesday with AMD. So we open green, right? Here's our open, our first candle on the 30-minute. That's what I've been trading lately, 30-minute, 15-minute. We'll start with the 30-minute. So if I now see, let me zoom in a little bit more. Back to Friday. I hate how I just moved it all the way. Okay, so Thursday, Wednesday, Tuesday. Okay. So here's our first candle of the day, 9:30. It's a 2 up. Now we opened green, right? Our open was around $98.78. So we have green time frame continuity right now on the day. Now the next candle, this isn't a very good looking candle anyway, just because we have huge downside wick, pretty large topside wick. So indecision. This is an indecision candle. So the next candle is a 2 up. So we did move up. We opened here around the 98.84 area, so almost the same area that we opened at. We went up to try the 99.60 area, and then we go to down. Now, this is what a failed 2 looks like. It's a 2 up candle that went red. Or the opposite would be a 2 down candle that went green. Okay, so like this guy, this is a 2 down candle that went green, right? The low of this candle took out the low of the previous candle, so that's what made it a 2 down. But buyers stepped in and brought the candle up. Now this is the opposite. A 2 up is when the current candle takes out the high of the previous candle, and then it becomes a failed 2 when sellers say, nope, enough is enough, it's moved too high, I'm taking my profits, or it's time to short it, and they bring it down. That is a failed 2. Okay, now what I'd be looking for once I see a failed 2 is the next candle to break the low of my failed 2. This will give me a 2-2 reversal. Like, these are the powerful reversals. When you have a failed 2, and now you have the next candle as a 2 down, right? So my entry would be $97.48. My price target is a modest $97.22. However, what I would do once I get to that price target is just tighten my stop losses. Now the strat would have you get out here, right? They say hit your price target, get out, trade another day, so to speak. Godzilla likes to actually just tighten the stop losses, make sure you're not going to have a loss. I'd rather walk away with a couple extra bucks, right? So I'll tighten my stop loss. Let's say I spent $100 on the contract. By now I might be up $110, not much. Now I'll tighten my stop loss to $100, basically breaking even. Now if I have a bigger move downside, I get to take advantage of that. And that's exactly what we had all the way down here. Boom. All right, so that's the first failed 2 that we have on Tuesday. I traded that failed 2. I think I mentioned it in this. I definitely mentioned it in the Discord. All right, so that's the failed 2. So now our time frame continuity on the day, anything below, I'm going to go ahead and put this here. Anything below this orange line, let me go ahead and make it bold for you. Big bold orange line is going to be red time frame continuity. So we are red on the day. All right, so now what we have is another 2 down candle. That's the one that we decided to get out on. And then we have a 1. So now this is a 2-1. So what you could do, and it's very much so up to you, you could trade a 2-1-2. Now this would have been a 2-1-2 to the upside. And your target would have been, so your entry would have been $97.47, and your target would have been $97.76. But you're red on the day. Unless you're about to scalp and get maybe like a 5 or a 10% move, this trade isn't for you. You're red on the day. You want time frame continuity in your favor, right? Like, that is one of the other big principles of the strat, having as much of time frame continuity in your favor as possible to give you that high probability move in the direction that you're expecting it to go. So because we're below this orange line, I would be looking to take nothing on AMD long on Tuesday. I wouldn't be playing calls at all unless I was writing them. So here we'd only be looking for short side plays. So what we have down here, this 2-1, let's call it a pullback. My computer just told me Easter's tomorrow. You know that. That's why we're doing this today. So what we're doing here is looking for this pullback. So here's the 2-1. Now, the idea would be, you go and remove these candles or these lines. So you'd be looking for a 2-1-2 continuation at this point, right? So that would be a 2-1-2 down that we'd be looking to play. Again, the magnitude is pretty lame. Go entry of 96.22 to a price target of 96.13. Again, that's one where you can't necessarily tighten your stop loss because the move hasn't really happened yet. So, just something to keep in mind when you're looking at plays. But that's not what we ended up doing anyway. So what we did end up seeing was a failed 2. Another 2 up, right? We have a green 2 up. That's the green thing there letting me know it was a 2 up. And then we have a failed 2. So the seller stepped in and started driving that back down. So now our entry is $96.79 if the next candle breaks below it. And our price target is $96.22. So you could be looking at like the 96 puts, the 97 puts if you have the money to play that. So it drops. It almost hits our price target. Well, at that point, I mean, again, you keep tight stop losses and you keep an eye on things. Now, what we did is chopped. That's kind of lame. We chopped. However, it did have a drop further down in the day. So if you got in here and you didn't get stopped out, because you do keep, I did not. I kept a relatively large stop loss on this one, just because, again, know your stock. AMD does have pretty wide movements. I know what my risk was, and I was willing to risk 20% of my trade, basically. So I didn't get stopped out, but what I did see is this, another 2 candle, 2 down, or another failed, I should say, 2 candle. So it went down, and when that happened, I got more puts. I knew what the day looked like. SPY was going, SPY was red, I believe, on Tuesday. 412. Yep. So SPY went 3 on Tuesday. Or that's QQQ. Wow. QQQ went 3 on Tuesday, and so did SPY. So the day was not looking that great. So I have that in my favor, right? Like, I now know that things just don't look good altogether. So my thought now is going to be, I'm looking at the 12. What was it, 12? Was it 12? Well, yeah, okay. Oh yeah, that was the right day. So the thought is that things aren't going in the up direction at all. So I'm pretty confident in my trade. That's why I also set a pretty large stop loss over here, larger than normal, just because, again, the trade's going in my direction. So I see another failed 2. I load up on some more contracts, and now we have the big drop. We come down to the bottom of my broadening formation, and I tighten my stop losses. I'm up pretty nicely in profit at that point, so I definitely want to walk away with a green trade, even if it's like $3, $4. I'm okay with any sort of profit. If I leave the day with more money than I entered with, I'm okay with it. I'm willing to risk it, but at that point, I'm pretty deep in the money, so I tighten my stop loss because I'm okay with taking whatever profit I have now. I didn't catch the bottom. I think this one candle actually ended up stopping me out here. So that's trading some failed 2s. That was on Tuesday. That's really all you have to look for. Using the larger time frames gives you a bigger magnitude. So if we take a look at, goodness, look at the hourly on AMD over here on the lower left-hand side. So this was the end of the day on Wednesday. We have a failed 2. So the thought or the trade would be, the open candle. Yeah, I know it's weird, but then again, in the first candle of the day, it went 3 on the 30-minute, and it went 3 on the hour. So the entry would have been $97.51 and your price target would have been $96.92, but all of this all the way down to 95.36 would have been, you know, just perfect, cherry on top. And you're so far in profit at that point that this this failed 2 down candle, I should say, doesn't, you know, affect you so much. Now, if it stopped you out because you had a trailing stop loss, okay, fine. But you know, you're so far in profit. If you ended up grabbing like $97 puts, or 97 puts or 96 puts, you're pretty far in profit. And that would be your fail too. I don't generally trade off the open or the end of the day previous candle. Just, you know, again, I'd prefer to see which direction things are actually going to go for the day. Some days you can just tell if we have a big old, you know, candle 3 down, QQQ, SPY, Microsoft, Apple, everything's going down, then, you know, that might be a day that I jump into something like this. But generally I sit out the first 30 minutes just to be able to see what direction things are going. But in the middle of the day, you had a failed 2. So we would have said if the next candle goes below the previous low, which it did, it ended up being a 3 candle, but, you know, it didn't necessarily break. I mean, it was a pretty modest break. It really didn't just drop, but our target would have been 96.24. I mean, you can play this on any time frame, but definitely like 15, 30, 60 is probably what I'd be looking for. And then again, the idea is having time frame continuity in your favor, as much time frame continuity as you can. So I look at the day, the 60-minute and the 4-hour. If I'm playing the 30, then if I'm playing the 15-minute candles, I look at the 30, the hour, and the day. I don't play the 2-2 reversals or anything like that off the 1 hour. I just like to know what the 1 hour looks like. So that's playing fail 2s. The next bit that somebody asked me is small account mentality. Now, I trade with a small account on a regular basis, mainly because I do stupid things with house money. So once I'm up a lot, I just make dumb trades. So what I found out is that it's a lot easier for me to say, and it kind of becomes a game, but I'll take $500 and triple it 4 times it, clear out the account, do it again with $500, do it again with $500, like rinse and repeat, basically. And that's what I've been doing for, wow, 6 months, 8 months, something like that. So doing that, the small account mentality, it's interesting because you have to be very certain of your trade, and you have to also have very tight stop losses. So if you get stopped out, especially at the beginning when you're starting to build this thing up, you know, going from let's say 500 to 700 or so, 750, when you're starting to build it up, you have to look at smaller plays. You can't go grab Apple, you can't get AMD, you're missing out on playing tech, which those are where the big moves are. You can't really do much on SPY and QQQ on a Tuesday or a Thursday, but you could play SPY and QQQ on a Monday, Wednesday, or Friday when you're playing 0 DTE options. And that is one of the best ways to build up a small account very quickly. So that is what I would suggest. Know your levels when you're playing on SPY and QQQ. Look for like 30-minute 2-2 reversals, 2-1-2 reversals, stuff like that into time frame continuity, and make your play. You know, but you want to have as many things as certain as you possibly can when you're jumping into a play. So with that, the other thing, if you don't want to play SPY or QQQ, because they do move quick, that is the one downfall with things. Like, don't sit here, play SPY and QQQ and trade them and hold them all day. Get your quick 10%, 20% win and get out, and do it again. buy one option, buy one call, buy one put, and get your 20% and sell it. You buy a put on a 0 DTE and it's like at the money. Let's see. I don't think they're going to update just yet, but oops. Trade product SPY. So yeah, they haven't updated yet, but these are going to be around $1.50 or 150 starting the day, probably Monday morning. So you can make your trade, right? You set a tight stop loss, or you just monitor it like a hawk and put a line in the sand. So if I'm sitting here about to play SPY, getting in on something, I'm going to wait for it to open. I'm going to see which way we think we're going. And now on the 30-minute, I see a 2-1. So I say, if the next candle, now we're in green time frame continuity. If the next candle breaks over 439.92, I'm going to look at a 440 put, or a 440 call. I'm sorry, 440 call. Or a 441 call. That's the nice thing about SPY. You don't have to necessarily get it at the money. You don't want to go too far out of the money, especially with a small account, but you also don't want to go, you don't have to be at the money. You could be like 1 or 2 strikes, 3 strikes out of it and still be able to catch a pretty awesome move because it has such awesome moves. So, 439 or 439.92 to you grab a 440, a 441, 442 put. That next 30-minute candle almost took out all of those. A call. Almost took out all of those calls. I've been paying a lot of puts lately. It almost took out all of those candles, right? So that would have been very profitable very quickly if you did that 2-1-2 and and stayed in it. So what we have here is a fail 2. Now, would I get in on that candle? No, because we're in, green time frame continuity. We're in the positive side for the day. That white line there that I just drew, 438.03, was our open. So I wouldn't be playing puts today. Sure, you get all the way over here and things start going downside, but you're still in green time frame continuity on the day. It's your call if you want to play this and risk your money. Again, the idea when you have a small account is to make every trade like it's your only trade of the day. And if you're going to do that, you want to have as many things in your favor as possible. That's going to be time frame continuity. That's going to be a setup like a 2-1-2 or a 2-2 reversal. That's going to be knowing your price targets, and that's going to be keeping tight stop losses so that you can, in fact, walk away with profit. And the last bit with that small account is, and I say it all the time in Discord, green is green. If you walk away with $2, great. That means now tomorrow you have $502 to play with instead of just $500. That's $2 more that you didn't have. You walk away with $10. Perfect, $510 now. If you can walk away with money, with positive amounts of money each day, you're going in the right direction. Right? Be able to celebrate small wins so that you can celebrate the really big wins. Because if all you're doing is celebrating big wins, then it's going to be a rude awakening at some point. I think a lot of people are probably seeing that, trading after the everything dropped in 2020 because of COVID. Now I think a lot of people are seeing that and seeing chop and stuff like that, but they were so used to the big wins. Now they're not sure what to do. So be able to celebrate the small ones. And always, in the Discord, if you have any questions about what you would do with this small account or how would you do this or that, by all means ask me. Always have open policy. My DMs are open in Discord for you. So feel free to ask any questions you have. No question is a dumb question. Okay.
Yeah, let me ask you something, if you don't mind, on what's going to keep you out of the trades once it starts coming down there at the end of the day on the chart that you're on.
On SPY here? So for me, what's going to keep me out is honestly just the fact that it's been green all day. And normally, also, I should break this out. This was right here.
I lost a follower.
Do what?
Hmm?
Oh, this last candle, this 2 candle here, this failed 2. That is the last candle of the day on Wednesday. So there's really nothing that kept me out of trading on 2. This was everything from. Let's see if I can do this here. Everything from here
I got it.
to here was Wednesday. So nothing really kept me out of the trade.
Got it. Yeah, I thought that was all one day.
I think I did too when I first looked at
Yeah.
it. That's probably why I said that.
Thank you.
Yeah. Any other questions? Sweet. Like I said, always open door policy. Ask me anything you want, both in the live sessions and Discords, and on the YouTube channel for all I care. Ask away. I'll answer what I can, and I'll also tell you if I don't really know. Not shy to say that. All right. Well, everybody have a happy Easter and enjoy the rest of the weekend.
Yeah, same to you. Have a good day.
Take care.